geography from Sydney to London and everywhere in between. But let's kick off in Singapore with our regular commentator, Vandana Hari, CEO of Vanda Insights. Vanda, your monthly bulls and bears report must be getting a little bit difficult now that the bulls have slaughtered the bears, it would appear. What's your outlook this morning?
So Sean, that report is never easy to write, given that it's a monthly and we are trying to look out to the next few days and what's in the wind for the next coming months. And my God, the markets have been so volatile starting last year, especially, right? But this time, I think I feel particularly proud that we are on the right track. So going into January, much like I would say the consensus view in the market, we were not too optimistic about the balances and about prices, at least through the Q1 and probably much of Q2 as well. I would say we have shifted, taken quite a bullish turn in our sentiment, as I think has the market as well. And that I would say principally because of a very sustained, surprising, no doubt, but sustained drop in COVID cases, which has become very obvious now, especially over the past 5 weeks. Basically, that has led to a much more optimistic view on economic recovery and oil demand recovery without having to wait for vaccinations and herd immunity.
Peter McGuire, CEO of XM Australia, welcome back to the table. It's in ways it sounds somewhat nostalgic to be talking about how cold weather disrupts oil supply and talking about some fundamentals rather than some big scary COVID illness that is spread across the world. So we're back to the basics: cold weather, higher oil prices.
Well, absolutely, Sean. Certainly in the Northern Hemisphere, though, Sydney, it's still not too bad looking out the window at about 24 and a half, 25
I
degrees.
know you have your shorts on under that table. I know you're just going to the beach.
I had to show that. Yes, exactly. I live opposite the beach, and it's a lovely time of year, mid-February. But I will say this, certainly, as building on what Vandana said, we've just seen the most enormous rally over the last, really since the start of November for the crude market. If you're looking at what the vaccine's doing in 5 weeks, since the inauguration, it's been one-way traffic for, COVID numbers being declined and smashed down. Vaccinations, we understand where Israel is and certainly where the UK is. It's a hands-on approach and they're very, very, I think, disciplined in their rollout. We haven't been in the same sort of fate here in Australia, so it's a different mindset completely. But yes, if we put our hearts over to what's happening in Texas at the moment and certainly across that Midwest and up to New York, it's frightening as far as that Arctic blast. And let's hope that it's not there for much longer.
Bora Bariman, managing partner of Hormuz Straits Partnership. Bora, welcome back to the table. Sitting in London, it may feel like glass half full, glass half empty is still your challenge. The vaccination rollout seems quite positive in the UK. After a long series of not positive headlines, Europe still faces a very significant COVID challenge.
Absolutely. You see the supply chain bottlenecks in the various countries. Not to be a flag waver, but the UK has done relatively well, and against that are the headwinds of Brexit. But when we pull back and look at the big picture, it's dominated by the US, right? It's the US has created this huge stimulus representing almost 10% of the US GDP to be injected into the markets this year, on top of the 2.2 trillion that was injected last year. And in this context, investors are voting with their feet, pouring I think it was 58 billion last week into stock holdings, which is coming from an equivalent reduction in cash holdings. And this is mainly going into US technology funds. I would have said the US stock market, but that's mainly represented now the main indices are represented by technology funds, and investors can't resist the temptation of dancing while the music plays. This stimulus is going to go on and on, but there is a caveat to all this. The Federal Reserve is asking the 19 biggest banks in the US to run stress tests to prove that they have adequate capital to withstand the 55% crash in the Dow Jones by Q3 2022. That doesn't mean it's going to happen, but it's a signal that the Fed Reserve is asking major institutions to prepare for major turbulence.
I think it may not be what's going to happen, but I would suspect if I did include it as my survey question this morning, could it happen? I don't think anybody would wake up tomorrow morning and be that surprised if indeed it did happen. But Vandana, what is happening, whether by hook or by crook, is that U.S. oil production, shale in particular, in West Texas, has been literally frozen into the ground, and new supply and old supply that survived the COVID pandemic is now being locked in by the ice. What's the outlook for the longevity of that disruption, do you think? Because given that scale of, there's reports of 2 million barrels a day of shutdown in the US on the back of this storm. But yes, oil prices have popped up above 60, but they're not keep moving. They're sort of stalled now, even though this is a pretty massive disruption.
Absolutely. I think what this US deep freeze has done is it's added a layer of complexity to those trying to analyze market balances. On one level, what this means for US crude and refined product balances, and on another level, then what it means for global balances. And of course, there's the time element as well. I would almost say there's similarities with what happens when major hurricanes hit as well. Sometimes upstream production is disrupted, but at the same time, refineries are taking less crude as well. So we're seeing something similar here, though not entirely comparable. So as you mentioned, there's an estimated 3.5 million barrels per day of production that has shut in because the wells have just frozen over, basically. Pipelines are having trouble keeping gas and oil moving as well. But at the same time, we've also seen an estimated more than 4 million barrels per day of refining capacity has also been shut in, mostly in the Gulf Coast. And as we know, Texas has been pretty hard hit by this deep freeze. So I think it'll take the market some time to get its hands around, what it means in the short term. There's less U.S. production. There's also less import. The Houston Ship Channel has also been shut since yesterday. But at the same time, the refineries are using less crude, producing less fuel. So, it's anybody's guess what the weather is going to pan out to be. But the last I was reading, this condition is expected to remain like this until the weekend, at least. So
I think
after
it
that, the
tells us
question
also that the inventories are still very high, because if this was normal times, 5-year average inventories, and we had 2 or 3 million barrels of US oil production knocked out, even for a few days, it would be a massive spike in the price. Like we saw when obviously the Saudi production, which was a little bit bigger, got knocked out about 18 months ago. But Peter, I'd like to bring you back in on the question of I don't know if it's going to be your favorite subject, but I'm going to make it one of your favorite subjects this year: inflation. I put 2 headlines in the digest today. One on my favorite subject. Well, it used to be my favorite thing, ketchup. I'm not allowed to have it anymore, so not my favorite thing. But nonetheless, it was promoted by Heinz that they're going to have to increase the price of some of their food products because of the raw materials are growing. And then at the same token, we have another story from one of the Federal Reserve board members saying, don't worry about inflation. The fact that she actually had to say it would indicate that there must be some concerns that by saying it might make it happen. What's your own thoughts?
Well, I think first off, Sean, saying it may happen, but we're not worried about it at the moment as far as Jerome Powell's concerned, and I don't think many central bankers are. The other side, of course, is the input costs, and we're seeing crude at these sort of prices and a resurgence as far as commodity super cycle, so everything becomes far more expensive. But the ongoing saga is I don't know any central bank anywhere that's really showing positive rates after you strip that inflation out and you really realize we're at zero or negative. And that seems to be the mantra over the next 12 to 18, 24 months. So it's onward and upward. That stimulates stock markets because there's nowhere else to invest. And then the other side, of course, is, yeah, if inflation hits 2%, 2.5%, is anyone really going to worry? It's going to be a handbrake if crude's at $70 a barrel, more than inflation's at 3%. So that's where it all feeds into itself, that loop. And at the present time, I think traders are having a delightful time. It's been an incredible 9 or 10 months. And I think that this year could be an outstanding year for, one, markets volatility, and secondly, let's park inflation.
Why do you think, though, that she feels, in this case, the Federal Reserve President, San Francisco Fed President Mary Daly, felt the need to come out and make these points, that there are credible analysts, including Larry Summers, the former Treasury Secretary, who are putting up warning signs? The Fed may not be worried, but they're signaling that they're not going to react even if it goes above 2%. I suppose that's the point.
Well, that's exactly right. Look, central bankers someone's got to say it, and obviously it was San Francisco's chance to discuss it because it's front page news and we're all conscious of it. And there's, when you've got Professor Summers, his voice also a contributing factor. We understand that the world is mindful of it, but the other side, of course, is we've got to get through this COVID, the vaccination period, and how everything else rolls out for the next, at least the next 3 to 6 months, Sean. And it's probably just, putting it out there, letting everyone realize that, yeah, we're looking at it from a central bank perspective, but we're not going to really give it a lot of weight at the present.
Bora, I suppose the developments of the last few days, in essence, makes OPEC's decision of what to do next even more complicated. Do you put more supply into this market or not, is the question. What's your own thoughts on that? Where does OPEC go next? Where should they go next?
Well, again, coming back to this question of, why are the central bankers saying what they're saying? There's all this debt out there that's holding up the system, and that debt is going to be handled, if it can be handled, in one of 3 ways: through growth, through austerity, or through more expansionary monetary policy. And I think the Fed is hoping to kickstart growth. There is that stimulus money that will be out in the markets circulating. And I think for the middle classes, lower middle classes, lower classes, a lot of that will translate into hydrocarbon consumption. So I could see the kind of merit in increasing those production quotas. There should be more demand as we get back to normal. And all our aspiration is that would occur by the summertime, right? But if that growth, return to normality, doesn't materialize, again, I think this debt is going to be handled probably by more money printing, hence the inflationary concerns.
Well, when does that become an issue for the markets? This scale of debt and quantitative easing has been around now a decade, and it seems to be bedded in as the new reality and no longer a reference in which to influence the markets from month to month, quarter to quarter. Does this chicken come home to roost?
Well, I think what you see is that volatility, right? And I think the volatility will be more pronounced. I mentioned that stress test, which is the harshest stress test that has ever been required by the Fed, that 55% stock market crash, right? They never have request that type of stress test. They never request stress testing for 11% unemployment, which is what was requested also. And I think they also requested stress test for a 5% decline, or maybe it was a 4% decline in GDP in the third quarter of 2022. So this world we're living in is one where JP Morgan and Morgan Stanley, they are lobbying to pay dividend because they had great investment banking results last year, where Fitch has 60% of global banks on negative outlook. So it's this, again, to repeat myself from last time we met, the K-shaped recovery. And it's only going to be reflected in more volatility.
Well, it seems like policymakers are purely addressing the bottom end of the K and not the top end. And that's, I suppose, where the oil producers, Vandana, need to be focused. In your monthly report, Vandana, Bulls and Bears, you have projected that OPEC Plus could seek to defend $60 a barrel at their next meeting. What do they need to do, do you think, in order to make 60 a floor and not a ceiling?
Yeah, I think they will, having seen those kind of prices, quite miraculously almost appear in the first quarter of this year. Look, I think as far as the Saudi 1 million barrel per day of additional voluntary cut is concerned, I fully expect my base case is for them to return that starting April. And of course, as the summer months roll on, they're going to say that our exports are going to go down anyway because we're going to be burning more of our own oil for our own electricity generation. I think then the question really is what the OPEC, non-OPEC as a group will do, which is, could they add another 500,000 barrels per day or perhaps even another 1 million barrels per day? Because they've held their horses for through Feb and March. So arguably, they could say, let's add another 1 million barrels per day. I think 2 million barrels per day extra into the market from April, perhaps June, July, the market could take it, but from April might prove premature. I think as a result, they will play it safe. So the Saudi 1 million barrels per day, I do expect to come back. OPEC, non-OPEC, they might just wait till May and June to add another, to put more oil into the market, or lean in favor of the lower number, 500,000. So in any case, we still see 1.5 million barrels per day come back. I think a lot will depend on what prices do over the next 10 days or so, or let's call it 2 weeks before they meet. If prices come under renewed downward pressure, I think they'll be even more cautious than the scenario that I've laid out.
Yeah, it's probably unlikely given this big freeze. If the big freeze hadn't happened, perhaps that would present this, maybe it makes it more complicated. Another big factor, Peter, of course, is where is China going and Asia demand in general. We had the IEA report out last week forecasting that indeed India would be the biggest growth in demand for oil over the coming decade and beyond, and not China. But that's on the horizon. Where's China looking coming back from its big holiday in the Lunar New Year?
Well, I think, Sean, it'll be a strong, from our researchers showing us that over the next 3 months, China is going to bounce back strongly. We've noticed that over the last really 4 to 5 months, it's been a very, very solid return, and that's only going to continue. So the next quarter to 6 months out is going to be a very, very solid time. I'm thinking Chinese equities will do reasonably well as long as nothing derails.
I mean, generally the forecasts by the different provinces in China are at 6 to 8% GDP growth for 2021. That's back up to the big numbers again.
Exactly, that's right. So that's going to be a solid performance this year. I think Chinese equities will dance very, very strongly to the upside, unless you see something out of left field, and who knows what that's going to be. But at the present time, it's onward and upward. Strong earnings from a lot of the US manufacturing companies and technology. And so all of that, I think, just flows across. As far as India and that next decade, it is their decade. I think it's more than that. I think it's probably their century. 1.5 billion people, close enough, and coming from a low base. And when I've been to Mumbai with Vandana, we've been over there on talks, and you get an appreciation as far as an incredible country that's just so engaged, mobility, but more importantly, Sean, the youth of the nation really is quite startling when you see the age demographic, and everyone wants more. They want more mobility, better food, better everything.
We had the Narendra Netanyahu, the senior advisor of the BJP party, on yesterday. He's forecasting potentially a 9% growth in India in the next fiscal year, which is bionic. Let's get the survey question. where the other issue that OPEC Plus and this market is facing is the oil supply coming from the unpredictable places, higher cost producers, smuggling out of Iran or Iran sanctions busting. What does that look like? We've seen a number of stories recently about Iran oil tankers being seized. And just this week, on the Iran-Afghan border, there was a massive fire explosion in which up to 200 oil tanker trucks were burnt in what was supposedly a fire. The question I have for the room today is, will Iran oil smuggling grow or decline under Biden before sanctions are lifted? And essentially the third option, stay the same. Grow, decline, or stay the same under Biden before sanctions are lifted. Welcome the room's view on that before looking to the rest of the week. Vandana, we've got obviously the issues of the smuggling out of, the freeze in America. We've got the stimulus coming. What else should we be looking for, do you think, for the rest of this week?
I think through this week and beyond, the market will start turning its attention towards what OPEC and non-OPEC are likely to do at their meeting in early March. I do feel that the Russians, the Saudis, will probably be holding their cards close to their chest going into the meeting, and sort of like keep the market guessing. I think, however, the market will probably start factoring in, an extra oil coming out of OPEC, non-OPEC. So we might see that putting a bit of downward pressure. Everything else remaining the same, including how the US deep freeze plays out. I think we're probably going into a bit of a consolidation phase for oil prices now. I think the optimism over COVID receding naturally, combined with vaccines and so on, as well as the optimism over the US stimulus, I think most of that is now baked in. So while we remain fundamentally moderately bullish for oil, I don't see, for instance, a huge continuing rally in prices. I think the next turning point will come after the OPEC, non-OPEC meeting, depending on what they decide.
It does feel, Bora, that this market wants to correct. It probably may have if we hadn't had this deep freeze. The fact that, as I said earlier, this scale of production outage has not pushed the price even higher sort of tells its own story that maybe it's wants to take a time out. But Bora, the sober reality as we started in Europe and particularly in the UK where you're sitting is that this is a year of two halves. We're still looking to the second half of the year to be Santa Claus. And the UK, Boris Johnson is to come out with his statement on the February 22nd about where the UK goes next. And the big question ultimately, will there or won't there be a European summer on the beach? What's your own expectation, or will this second half have to be pushed towards the fourth quarter for the big recovery?
Well, I'm hoping, yes, Q3 could be the big recovery quarter. It's got to be. Vandana is absolutely correct that the ball is in OPEC's court at the moment with its supply quotas, because there's not going to be much movement on the demand front, really, especially with respect to that jet portion of the crack, right? We've got to see something shift in terms of liberalizing international travel, and all the actually steps on the ground we've seen until now are actually tighter and tighter. We have people coming from the UAE into the UK now having to stay in their whatever it is, 1,750 pound accommodation, right? So this is unprecedented that we've compelled people to stay in this type of accommodation here in the UK. They're following the Australian model. When is that going to be released?
They're following, but it was about 6 months ago or more. Yeah, Australia did it.
The ministers are not being drawn into Happy Easter or anything like that. They're just saying we'll look at the statistics and the science and make our decision later. So punting decisions.
And do you think in the UK there is an appetite for this? Obviously, people are getting exhausted. How much will that weigh into the decision making from the government in the UK and Europe in general to be able? I mean, the Germans have just recently announced a further extension of this lockdown.
I think the Conservative Party certainly has a strong vocal faction that is pushing for liberalization. I think on balance, the cabinet is holding the line sort of to be cautious, but there's quite a bit of pressure to liberalize. And I believe that's almost a cross-party thing. I don't see the Labour sticking their neck out, opposing opening of schools or liberalizing travel or anything like that. They're just sort of just saying they should have done all these steps sooner. But
I suppose that everybody has to face this challenge of the exit from COVID strategy. And do you do it with greater caution, or you do it with some exuberance and the risk of having to yet go back into another lockdown? Let's get the survey result on this idea of Iran supply coming in. Their expectation of this room, at least, is that it will grow under Biden before sanctions are lifted. How much, of course, is the next $10 million question. But Peter, your outlook for the rest of the week, where's this market going, if anywhere but continued upward motion?
Well, Sean, I'm looking at US dollar index. I always say that, but it's sitting at around about that 90.4. I'm also looking at the next part, of course, which is where does the US equities trade? We had Monday, which was a holiday, President's Day. So I'm conscious of that side of it. Do we see an uplift? Do we see, it was very choppy today across Asia. And I just think that there could be another little bit of a push up. Traders are at home, the big, and I know it sounds crazy, but the world doesn't stop because we're having a freeze in. And I think the traders are probably looking and they're saying, well, look, I see a little bit further of opportunity. We're seeing good volumes. And I think that may continue across, the commodity set, and next, of course, equities.
Is there any argument to be made where the dollar could strengthen from here that would give it support?
Yeah, you could see it. I mean, there could be a 91 handle there, a 91.5. It's only early in the Biden administration. I think it's still, it hasn't got its firm footing, and it's been choppy over the last 6 to 8 weeks. So yes, that could see a little bit of an uptick where at that bottom range, we're not in the 89 handles, but there's every chance you could see it back above due to the stimulus and due to, I think, a general consensus that, the rest of the world's not doing as well as what the US is doing.
Well, let's wrap it up there. I just want to take the opportunity to heads up on the Fujairah workshop next week, where we're going to be looking at the question of what needs to happen to elevate Fujairah into a global energy trading hub. It's on that journey, and next month is the big development where the Murban contract will be go live, and it, of course, will be physically settled in Fujairah, and ICE Futures Abu Dhabi will open its doors next month. Our halftime talk this week feature interview with the CEO of OMV, and he said its story is all about jet fuel. I suppose when it comes back, the oil market will go. So that's for the watching and the looking. When you have a chance, actively encourage that. But until we catch up again, thank you, Bora in London, Vandana in Singapore, and Peter in Australia and Sydney. Back to the beach. Enjoy your Barbie. All the best. Catch you again. Thank you very much.
Thank you, Sean. Thank you, team.
Thank you. Bye-bye.
Bye.